Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta, who is in Paris today. We're an hour away from the opening trade. Here's what you need to know. Emmanuel Macron gets ready to address the nation after lawmakers in Paris pass a vote of no confidence in his Prime Minister Michel Barnier's government, creating more uncertainty for French assets. Bitcoin surges past $100,000 after Donald Trump's pick to head the SEC injects crypto markets with additional optimism. Plus, mission not yet complete. ECB President Christine Lagarde says the fight against inflation is not over as the central bank weighs next week's rate decision.
Anna, crypto's definitely on top this morning. We've surpassed 100,000. We're trading 101 right now. We've been up to the 103 kind of territory. Politics definitely driving assets right now. Euro Stoxx 50 not doing much. We're watching what is happening in France. 105.28. It's interesting the euro is actually tracking a little bit higher this morning. And OPEC meets a little bit later on today. Brent up by 0.1%. We have lots to discuss. The countdown to the opening trade starts right now. Good morning, good morning. Thursday morning, we have lots to discuss, as I say, and politics is in the driving seat. Take a look at what is happening with Bitcoin, the SEC, the prime driver there. And then, of course, we turn our attention to what is happening in Paris, or not happening in Paris. Kriti is in Paris. Let's talk about what the morning after the night before feels like in the French capital. What now?
It feels like a giant eye roll. At least that seems to be the take from the people here on the ground, that this is just a continuation of what we're going to see, not just into next year or in the next couple of weeks, but into 2027. Guyana, we're 3 years away from that, and the expectation is that the political uncertainty will just keep continuing.
Yeah, absolutely. It keeps continuing, Kriti. And in the very near term, a lot of people throwing around terms like technical prime minister, technocratic government, caretaker government. We don't really know what the next few weeks look like in French politics.
No, we don't. This is uncharted territory. This has never happened in modern history, really, that we need to go to not only a caretaker prime minister, but one that can't actually pass a budget through. So they're going to do a very, very nerdy French constitutional thing called the Loi Spéciale. It basically is an amendment to the Constitution brought into 2001 that says, just in case the parliament can't come to some sort of agreement, which clearly they cannot, they will take over the budget and from 2024 and move it into 2025. But there are some real hard economic effects when it comes to that. Things like higher taxes for a lot of people, electricity costs, even some of the pension contributions that are linked to inflation are going to be a little bit skewed because, as we both know, inflation now is different than it was, say, 12 months ago, and now they have to continue that into the next couple of months. That's on top of who may actually be the caretaker prime minister. Will it be a continuation of Michel Barnier or someone else?
Yeah, Barnier is going to be the caretaker. Who comes after him is the real question now, and is it a different name? It just feels like, though, this is the prelude, that this is we're going to knock the Prime Minister off his perch, then we're going after Macron. This feels like the kind of the early, in some ways, the early skirmishes in a longer, bigger battle.
Yes, I mean, which act in this drama we are in, it remains to be seen, doesn't it? Because a lot depends on a court case next year when Marine Le Pen making her own assessments of what that court case that hangs over her will mean for her presidential expectations and ambitions, because that's where we know her attention has always been. Kriti, we were talking earlier about what happens here, a lot of uncertainty, a host of names being thrown around Paris, some of whom will be very familiar to those who follow French politics. They're people who've been Prime Minister before, and some other names in the mix as well.
Yeah, it feels like the front runner here is a man named Bernard Cazeneuve, basically the former prime minister who was a big contender for Michel Barnier's job the first time Emmanuel Macron was looking for a prime minister. This is someone who's a centrist. This is someone who is aligned with Macron in his views in a lot of ways, respected by some of Macron's allies, like Gabriel Attal, for example. But then there's several others as well. Jean Castex, another former prime minister, also in the running, not to mention the current defense minister or minister of armed forces, Sebastian Lavreau, basically someone who has been in French politics for some time, is well respected, is seen as an up-and-comer. These are all potential names, but it really is anyone's game at this point.
Kriti, thanks very much indeed. Kriti's going to be back throughout the next couple of hours, keeping us updated as things evolve throughout the morning. This is quite a niche joke, but I was trying to think of Asterix characters that we could think about for the French government. I think we should rename Barnier, though. I can't work out what the Asterix name for Michel Barnier would be. Would it be anti-climax, maybe, or anti-deficit?
Yes, something to do with his short-lived tenure, no doubt. Is this all because Castex ends with an X?
That may have been.
This is where this joke has come from.
This may have been where the joke come from. If anybody's got any good ideas about Asterix characters for the next French Prime Minister, circumspect, maybe one that I would maybe think about for the next, figuring out a way around things and cautious approach. Anyway, let's talk about, in some ways, what is the big market story of the day, and that is what is happening with Bitcoin. I talked about politics and the impact that it is ultimately having. Bitcoin clearing the 100,000 mark. We've been waiting to figure out exactly who the next SEC chair is going to be. Gensler obviously was fairly anti-Bitcoin, and it now looks like we have a candidate that Trump feels will deliver maybe more on that front.
Yes, somebody who's going to be an industry cheerleader, according to those who are in the Bitcoin space. Not only Gensler anti-Bitcoin, but the enforcement action that he took and the way he went about doing that, the scale of the enforcement activity in this space was something that the crypto industry wanted to change, and they see that perhaps Paul Atkins, who is the new appointment at the SEC, will do just that. Interesting to think about how this rubs up against other assets, because on the one hand, you might think if the retail crowd is going to be distracted into cryptocurrencies, what does that mean for the NASDAQ? What does it mean for, NVIDIA and other memeable stocks, I suppose, if you like, or stocks that people know a lot about. But on the other hand, I was reading on the Markets Live blog and Mark Cranfield talking about a positive feedback loop between the gains that are made in crypto and what happens in the NASDAQ. So that's something we need to watch.
Relationship has been quite strong. Like, it's effectively traded with the tech trade, Bitcoin.
Yeah.
But you also need to think about the things from a liquidity point of view. You've added trillions to the value of Bitcoin. 1.3 trillion has been added in terms of the market value of, not Bitcoin, but crypto coins during this post-election Trump period. That's an awful lot of liquidity that's being sucked up. So this is a huge, great liquidity suck. What does that mean for other assets? And does it tell us also just about the amount of excess liquidity that is out there? How much leverage is being applied here? Yeah,
well, that's really interesting, isn't it? Because we've talked about this positive feedback loop with US stocks as if they both can rise together. But on the other hand, is that liquidity flow sucking energy out of other assets? I mean, you've created a crypto asset that is almost as big in terms of its size and scale as the FTSE 100 and all of the market capitalisation that exists on that market. So that gives you a sense of the scale, doesn't it? That's the Bitcoin story overnight then, Guy. We also need to turn to some of the macro things and the ECB and inflation still being talked about at the ECB. And I know that's because it's the mandate, so that's going to be what gets the headlines. But the inflation fight is not yet won. That is the narrative that we've heard from Christine Lagarde, and I wonder if this is a little bit of a gentle steer for the markets towards 25 basis points next week instead of 50, because we also heard from Nagel saying there's no need to act too hastily. We heard from Makhlouf saying he prefers to be cautious. So all of these words sound like euphemisms for 25.
Can I bring the French story into what is happening with the ECB story? Carsten Bretsky over at ING is raising an interesting point that ultimately, if yields stay high because of the huge amounts of debt that European countries are currently dealing with right now, the ECB may have to figure out a way of managing that process. And he's talking about, this is not his central case, but he's talking about the tail risk of yield curve control in Europe, which I think is a really interesting thing to think about, because also potentially you're going to have higher rates in the States, also influencing what happens here in Europe. Ultimately, transmission might be broken. So there's some sort of transmission protection instrument he's talking about potentially being put in place.
Yeah, we've asked our guests on a number of occasions, what happens if US rates stay quite high and the ECB is desperately trying to get lower rates through its economy to stimulate its economy? If that transmission doesn't work, either because rates stay high for domestic reasons due to debt and deficits, or because of that flow across the Atlantic, then what else can the ECB do? Well, this is an interesting idea.
We may have to mention as well that Powell spoke yesterday. Sounds like he wants to go 25. Well, certainly that was the market read. We're waiting for payrolls that are going to come through tomorrow, but that certainly seems to be the read, the 25, and then sounding very cautious into next year.
Yes, and your thoughts on Bitcoin, which is useful at 100,000. Says it's like gold, not the dollar.
Yes. which is an interesting story. Gold's actually picked up a little bit this morning, but gold's been on something of a tear as well.
Yeah, absolutely. Let's tell you what's coming up through the programme. The guests we're going to be talking to will be addressing a number of these stories, again and again as we return to them, these themes. First, on French politics, Marie Jacot, Edmond de Rothschild Asset Management over in France, the CEO of that business. We will certainly talk about all things French politics, French markets with her. We'll be joined by Thérèse Ribera, who is the EU's new competition chief. That is an exclusive conversation with Oliver Crook in Brussels. Don't want to miss that. Stephen Orth joins us, Federated Hermes CIO for Equities.
We're going to debate whether or not US assets are in a bubble. Is the US in a bubble? Is Bitcoin in a bubble? How do you know a bubble, and do you continue to trade a bubble? We've got some great guests lined up to debate this. We're going to have a round table in the second hour of the show. Victor Haghani, Elm Wealth founder, former founding partner of LTCM as well. Peter Cheer, Academy Securities Macro Strategy Head, both joining Anna and I around the table a little bit later on.
Here's what we're watching out for then today. We talked a lot about energy markets yesterday. We are going to have a meeting today with OPEC and non-OPEC, so that's OPEC Plus. That ministerial meeting taking place online, 9:30 a.m. UK time. We'll get construction PMI for the UK. We'll also get US trade balance data, initial jobless claims, and a number of central bank speakers will be giving their thoughts. The Fed's barking, the Bank of England's Megan Green.
Looking forward to all of that coming throughout the day. What else do you need to know first thing this morning? Let me update you on what the stories look like. Brian Thompson, the CEO of United Healthcare, has been fatally shot in Midtown Manhattan in what the authorities are describing as a targeted attack. This igniting a massive manhunt across the city for the gunman. Early reports suggest the attacker was waiting for Thompson upon his arrival at the hotel where the company was hosting its Investor Day. The attacker approached the executive from behind and then shot him multiple times. Europe's biggest asset manager, Amundi, is said to be interested in acquiring control of rival Allianz Global Investors. This as deal-making heats up in Europe's asset management industry. Sources tell Bloomberg Amundi has been holding on and off talks with Allianz, the German insurance giant, for several months. Possible structures could include a full acquisition by Amundi or a combination leaving Allianz with a sizable stake. And South Korea's president is facing widespread calls to resign after he briefly imposed martial law, sparking a political crisis. The Democratic Party and 5 other opposition parties submitted a motion to impeach President Yoon earlier this week. The country's main opposition leader acknowledges it may be difficult to garner the 2/3 support needed, though, for impeachment.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
President Yoon is expected to deliver a speech to the nation later today. Feels like the initial phase of this is over. We're going to get an impeachment, maybe not successful. But it does feel like this is going to have a dramatic impact on assets for a longer period. Now, I say dramatic. It's just going to be an extra discount that is being applied, which was already there to a certain extent when it came to South Korean assets. But it also speaks, I think, just to the tension that exists within the region. And does this affect, is this something that investors are just going to have to realise applies to maybe all of Asia in terms of the assets?
Well, we were having that conversation, weren't we, yesterday with Mark Cudmore about which South Korean assets does this story stick to? And he was suggesting that stocks, where we've seen that South Korean discount being applied versus some other regional markets, that could be the area. I mean, but in the very short term, it is unclear, as you say, whether we do get this impeachment then, because the PPP party, the ruling party, the party of the president, they are saying that they won't back the impeachment. And you need a 2/3 majority to get this impeachment through. So the opposition can't just do it alone, so it looks as if there is some uncertainty there. Stocks are down in South Korea once again, but then we've got some negativity around Hong Kong stocks as well. So it doesn't seem as if it's a
doesn't
trade,
look out of kilter.
No, it doesn't. It doesn't this morning. No, in the way that it did yesterday.
So it's going to be really interesting. I just wonder whether this is the first of many tensions that we're going to see as the Trump administration takes over, as its attitude towards China changes from the Biden administration. I wonder whether investors fully understand the implications of that yet. It's really hard to tell.
Yeah.
Trump wants to be unpredictable. We're already starting to see unpredictable events as a result of that, and we haven't even got into the start of the presidency yet.
And his appearance with the North Korean leader during his first presidency, of course, was pretty unpredictable, and we certainly witnessed those scenes first time around. We'll see what the second iteration brings. Coming up on the programme then, an exclusive chat with the EU's new Commissioner for a clean, just and competitive transition. That conversation a little bit later on this hour. Plus, we'll keep you up to speed with the price of Bitcoin after it crosses over the 100,000 mark. It's still there, 101,000 and some change. Up next, it's a murkier outlook for the euro and French assets amid the wait for a new government. We'll dig into the market story in a little bit more detail. If you want to get involved in any of these conversations on France, on Bitcoin, on South Korea, on any of the topics we're throwing around this morning, then please do reach out. IB plus BBTV Go is the function that you can use to get in touch with us on the Bloomberg terminal. This is Bloomberg. Welcome back to the opening trade. It is just coming up to 19 minutes past 7 here in London. Let us tell you a little about some breaking news across the Bloomberg terminal from the energy sector. Equinor UK and Shell UK, so both subsidiaries of those big global oil energy businesses, are to combine their UK offshore oil and gas assets to form a new company which will be the UK North Sea's biggest independent producer, so really just beefing up the scale of those UK North Sea operations. So just to let you know that on deal completion, the new independent producer will be jointly owned, 50% Equinor and 50% Shell. So that is the story coming out of the energy space this morning.
Drill, baby, drill. Let's return to our top story of the morning. Emmanuel Macron is now looking for a new Prime Minister, this after the far right and left united in France to push through a no-confidence motion against the current government, the outgoing government, the Barnier government. The French president needs a premier who can pass next year's budget through a deeply divided parliament. Let's talk now to Marie Jacot, France CEO at Edmond de Rothschild's Asset Management. Marie, thank you very much indeed for joining us. What do you think investors should make of what is happening in France? My pleasure. And what comes next?
Well, I think the situation was still very early on. It only happened yesterday afternoon. The Prime Minister is going to hand out his resignation this morning at 10, and then President Macron is going to address the French people tonight at 8 p.m. So really, we are still in the midst of it. What we should expect for sure is sustained uncertainty and volatility for a while, most likely until next summer, when new legislative elections are organised.
Do you think that is now priced in, that kind of scenario, Marie? Do you think all of the kind of the news that we currently have, i.e. instability until next summer, do you think that is now in the price?
Part of it is priced, for sure. So we've... You know, between yesterday and today, we've seen a relatively contained reaction from the market with clearly a widening of the French spreads, but no drastic movement that would indicate, you know, a deep lack of confidence. But we are expecting clearly, and we're watching very closely the French stocks. We're not overly exposed to French OATs. On the French stock side, we're very attentive, and we start seeing, you know, clearly some good entry points. And as a French equity investors and European equity investors, we feel that, you know, that could be some good entry points.
Marie, just to linger on the politics for a little bit, do you think any kind of budget can be agreed by the various parties in the National Assembly, or are too many of them incentivised not to agree on any kind of budget?
It's going to be very difficult to muster a majority around any budget before the constitutional deadline, which is around the 20th of December. Obviously, the two main points that have led to the Barnier government being overthrown was, first of all, the funding of the social security, and secondly, the indexing to inflation of the retirement pensions. The issue is that it was very much something that was So the indexing was very much something that was required by the Rassemblement National. Now it's also a requirement from the left wing, and clearly something that's going to be very costly in terms of spending. The cost has been estimated to be around 27 billion, and that would obviously clearly lead to more deficit. The estimate by the government is that we are very likely to see a deficit of around 7% next year, to be compared to the current 6% and the target of 5% of the Barnier budget. So very unlikely. We're very. I mean, what we think is that the likelihood is for a technical government and for a rollover of the 2024 budget into 2025, which is something that's literally only happened once in the history of the Fifth Republic.
Yes, remains quite untested. I wonder how wide you think spreads should go then. Things look quite calm in the aftermath of this, both on the euro and indeed on bond markets. The French-German 10-year yield spread has opened pretty steady at 84 basis points. That's not even the highest we've been at this week. On this news, we've seen Aberdeen talking about 100 basis points. I was reading research last week that talked about 125 basis points. I mean, what are you preparing for in Paris?
Well, I think, if we take a step back from the current crisis and look, slightly, more mid to longer term, we're certainly expecting that uncertainty is going to remain. So further spread widening. I think one element that's going to be very important is whether a compromise is eventually being found or not. There are essentially three options, if you like. So the rollover of the 2024 budget. Another option is that the new government delays the parliamentary discussions beyond the 20th of December and then decide to pass a budget based on, a decree. And that would obviously be both legally and politically very delicate and very tricky. And the third solution is for President Macron to use Article 16 of the Constitution that will give him extraordinary powers in the event of an extraordinary crisis, and for him to be able to implement a budget without a vote. And that would clearly increase uncertainty and volatility.
Marie, why do we think that elections next year in July could potentially clear this situation? Is that going to be enough? Or ultimately, do we need to see presidential elections in France to provide the kind of clarity that ultimately the country needs to move on?
Well, we think it's likely to be very difficult for President Macron to continue to govern, not least because it seems to be quite impossible to find a majority around any of the hot topics at the moment in France, as we've mentioned about the social security or the retirement pension indexation. We think that we may very well be in a position, and look, the LFI has already required that President Macron resigned. It's not yet something that the Rassemblement National is asking for, but things could change, and pressure is likely to continue to improve on President Macron if no good solution is being found, which, quite frankly, at the moment, seems to be impossible.
Marie, thank you very much. Thanks for joining us. Marie Jacot, France CEO at Edmond de Rothschild Asset Management. Thank you very much for being with us. We will keep an eye on French assets. We'll keep an eye on the CAC 40 when it opens up. But things looking pretty steady on bond markets so far this morning. Coming up on the programme, we'll be joined by Teresa Ribera, the new European Commission Executive Vice President, as she takes on the powerful competition portfolio. That exclusive interview coming up next. This is Bloomberg. Welcome back. This is the opening trade. 30 minutes until we start trading here. For European stocks, let's look at the futures picture then and see what that has in store for us in half an hour's time. We are expecting a little bit of weakness, perhaps on the French market. The CAC 40 down by 0.4%, which is interesting given the resilience we've seen in the run-up to the vote of yesterday and the calm nature of trading in the euro and in bond markets. I mean, we see a slight widening of the spread this morning, but it's really slight. It's not even the highest we've been at all week. 83.8 is where we trade in terms of that spread against Germany then, Guy. But we could see a little bit of underperformance on the CAC 40, perhaps at the start of trade.
So we've seen the widening. That's already happened. That's in the price. So we've got what current politics looks like kind of already priced. What comes next, we don't know yet.
Yeah.
So that has yet to be priced in. And everybody we're talking to just shrugs their shoulders and doesn't. We don't know.
Yeah.
A sort of very sort of Gallic shrug of the shoulders in a kind of what comes next. We have no idea. This is such a chaotic situation. That bit doesn't feel like it potentially is priced yet.
No, exactly. So a lot of unknowns there. And we were just going through some of the different permutations of what that government could look like with Marie, who was taking us through some of the various options. Meanwhile, over in the United States, we hit, yet another record on US stocks. The Nasdaq does well, up by more than 1% yesterday in session. Bitcoin. Over $100,000. That seems to be the talking point of the moment.
It feels like the gap between the United States and Europe feels like it's getting larger and larger and larger. And I guess that's the job of the new Commission, to close that, even that perception gap. The new Commission is getting to work this week in Brussels, starting a fresh 5-year term, of course, under President Ursula von der Leyen. There are a host of issues that await the new executive arm. Competitiveness, yep. Defence, regulating big tech, bureaucracy. The list goes on and on and on. Let's get more on what we can expect. Oliver Crook is in Brussels.
That's right, Guy. And a new commission and with it new rules. Arguably the most powerful job now marries one of the EU's most influential tools, the antitrust regulation, with its greatest existential imperative, bringing back competitiveness to an economy that has fallen behind the United States and increasingly China. These responsibilities are now held together by the socialist from Spain, Teresa Ribera, and we're very pleased to be joined by her for her first TV interview since taking the job. Executive Vice President, welcome. Thank you so much for your time this morning.
My pleasure.
So listen, I'd like to start first with just your title, Executive Vice President for Just and Competitive Transition. Sorry, Clean, Just and Competitive Transition. For those of us who don't speak Brussels, can you translate that? Can you explain to us where you will be focusing your energy?
Okay, thank you so much. I think that this is a very relevant question because it tries to show to what extent the deep economic transformation that we are experiencing needs to pay attention to the drivers for creating opportunities, so to be clean, but also to the drivers that ensure that people can benefit from these opportunities, so being just when trying to be competitive. Competitiveness is very much linked to the digital and green transformations that are already ongoing worldwide.
Mm-hmm. And one of these sort of tools and legacies that was left behind by your predecessor, Margrethe Vestager, is a legacy being very tough on big tech, legacy in Silicon Valley, but also she's left you new tools in the Digital Markets Act. Where will you focus your energy in enforcing the Digital Markets Act? You have a lot of cases pending at the moment.
It's true that what we have also experienced these years is that there are global players that do not fit in the traditional way we understand regulation or a well-functioning market, and they concentrate increasingly more and more power market that at the end affects the prices and the competitiveness and the competition between the different players in the business and in the household. So what we will try to do is, of course, to keep on going her legacy, to implement, to make a proper implementation of the Digital Markets Act and to follow, to try to identify how we can ensure that digital is real, but that the protection of consumers is also real.
Yeah, but also over all these years, for example, $8 billion have been fined to Google. And Margrethe Vestager, before leaving, said that basically the only way that it seemed to actually be able to deal with this competitiveness issue, because these companies can sort of absorb these costs, is basically a divestment, particularly on ad tech for Google. Is that a view that you share?
It's something that it is, of course, on the table, and we try to work together with other relevant competition authorities worldwide, including the U.S. Competition authorities. And in some cases, it is true that the question is how much power they accumulate, because they go along the value chain in different aspects dealing with the digital markets. And in those cases, it is important to take into consideration this potential division, this potential the investment from some of this business case. So we will be assessing case by case.
And have you been speaking to the DOJ then? Because they, of course, are also looking at these similar issues, and you just mentioned that it's coordinating.
Well, I have been in contact with some other authorities, and it's been only 72 hours in office, but we will do that.
But
yes.
so another question: have you had any contact with Trump or his team, or any contact with the U.S. administration? Because of course, he has been very outspoken against Margrethe Vestager and the influence over American companies.
Well, what I got was this news coming from yesterday evening here in Brussels that he will be appointing someone born in Europe to deal with this competition and antitrust cases. So I hope to have the opportunity to meet her soon and to exchange views on how they intend to proceed.
Yeah, and I'm trying to imagine how you see managing that relationship, because Donald Trump doesn't necessarily draw a distinction about discrete sort of antitrust matters. He will see it as a European attack on the United States and may put that in a sort of broader negotiation, and he could tie it to all sorts of things. So how do you anticipate that playing out, particularly when you're going after some of America's most powerful companies?
Well, I don't anticipate anything, but I will try to anticipate cooperative relations in these fields. I think that both American consumers and European consumers, worldwide consumers, do benefit when we pay attention on how the market does work. And I was said, and this is quite clear, that before, in the previous Trump mandate, there was also some involvement, relevant involvement and coordination between the competition policies and decisions between the two authorities. So I hope that we can work together.
And you will have heard the sort of old adage that the U.S. innovates and the EU regulates. And that is obviously something that you've also come to try to address, is not just antitrust and competitiveness, it's the competitiveness of the bloc as a whole. How do you change sort of that reputation within the EU in trying to marry these two roles of antitrust, but also making the Eurozone more competitive?
That's one of the most important targets for this period, for this term of the European Commission, to ensure that we recover the attractiveness of investing in Europe, the European dream being placed also in the economic and business reality. And I think that this may differ from the way that the US plays their own capacities to become attractive. The understanding of the social model may differ to a certain extent from Europe and the US. But yes, we need to bet on simplification and a much more well-functioning single market, because we are probably one of the biggest markets worldwide, and to count on the innovation capacities of our business and our society.
And one of the sort of great sort of solutions that has been advocated by Mario Draghi and a number of others is that basically you need to build European champions, not just national champions. Does that mean, as a sort of antitrust authority, you'll be a little bit more lenient in looking at potentially takeovers of companies within Europe in order to build what we're being told is required to compete with China and the United States?
I guess that there are two things that we need to pay attention to: how we can build stronger players within the single market without putting at risk a well-functioning single market, where the small companies, which is a big share of our business corporates, do have a role to play. And at the same extent, when in the global markets, in those markets that are global, the European players can have their own share. And I think that this forces us to take into consideration a much more comprehensive understanding on how things are working and where we may have this opportunity to play this role. So it is not that we forget about the competition rules, because this is a way to ensure competitiveness. On the contrary, I think that we need to get this balance. Otherwise, competing outside, undermining the capacity to compete in the internal market could not bring us to any concrete solution. That's also one very important message coming, for instance, from Christine Lagarde.
Yeah, and then one of the other sort of issues with competitiveness, obviously within Europe, is the issue of China. And one of the topics that we've been sort of talking about and addressing recently is whether or not Chinese companies, you may sort of agree with this position, I'm kind of curious where you stand, that in order to benefit from subsidies and grants within Europe, that they would have to share intellectual property as the Chinese require of European companies.
Well, this is another very important innovation coming from the Starkhurst Times.
Yeah.
This idea of paying attention to the foreign subsidized companies, investments that do have an impact in the level playing field between the companies that are already working in Europe. And I think that we need to get deeper into this this regulation, how we can understand better what it may mean and to what extent it undermines this level playing field, and how we introduce remedies that avoid this happening.
And just one very final question, because your sort of background is in climate and dealing with all these sort of climate issues. We've seen a huge backlash from the private sector and increasingly on national fronts in votes on the sort of climate agenda. How do you manage to pursue that while at the same time convincing people that it is not harmful economically?
I think that the reasons why we step in the climate action are more important than ever. And they are good drivers for innovation and creating opportunities for business cases and for new jobs and for new alternatives in industrial terms too, so that we can count on long-lasting competitiveness. The main focus of concern should be how we can ensure a reasonable pathway between what we have today and where we want to be. And this requires a much more deeper dialogue between the different key players in these cases.
And many of the people that I speak to are a little concerned that the timeline was perhaps a little bit tight on those sorts of things, but this is a conversation I suspect we'll be having for the coming years. So thank you so much, Teresa Ribera, the Executive Vice President here, taking over from the antitrust portfolio, competitiveness, and the clean transition here in Europe.
Great stuff, Ollie. Thank you very much indeed. We need to pay closer attention to foreign subsidies. Interesting line coming out of that conversation. Ollie Crook in Brussels. Curry's in Paris. We're waiting for the start of French trading in terms of the equity market. We're starting to get a look at the bonds. Curry, what are we seeing?
We're seeing very little in terms of the bond reaction. I think there was an expectation that maybe this is where the chaos would come. But Guyana, you are seeing bond futures bonds opening fairly steady here. The spread between that French debt to German remains around 84 basis points, which, as Anna pointed out, is still lower than where we saw earlier this week. A lot of movement, though, maybe in the French stock market. That's going to be crucial. Futures are lower there. And it speaks to this idea that we still have a statement, by the way, coming tonight at 8 p.m. local time from Emmanuel Macron. Perhaps the volatility gets delayed 24 hours into tomorrow. At least that's what we're seeing for now.
Kriti, thank you. Kriti Gupta, of course, in Paris for us. CAC futures cooled down by 0.4%. We'll keep an eye on those at the open. Europe's biggest asset manager, Amundi, is said to be interested in acquiring control of rival Allianz Global Investors. More on that M&A story and our other stocks that we're watching this morning. That's coming up next. This is Bloomberg.
Bitcoin's up. We're over 100,000. We have reached the milestone and gone beyond. I think we got just short of 104 a little bit earlier on. The world's most valuable cryptocurrency continuing its post-election bull run. Joining us now, Bloomberg's Ana Herrera. Good morning. What's going on here? Why have we cleared this? Is it as simple as we have a new boss at the SEC that is much more friendly towards crypto?
Yes, I think at the moment it is. Obviously, there was a massive rally when Trump got elected because the expectation was that this would happen. It flirted with the level a bit a few weeks ago. We got very close, but it didn't. And then yesterday, when Trump said he was going to appoint Paul Atkins, the price just tore across. And now I guess it might even go higher. So it is very much just the expectation that now, I guess, the sky's the limit. This is what I'm getting a sense from the people in the sector.
OK, and part of that's because he might have a very different approach to regulation, a lot looser approach to regulation. So what are we watching for next? Details from him? Details about possibly a specific crypto appointee at the White House. Is that still in the conversation as well?
Yes, yes. They want to have a crypto czar at the White House, so an advisor. And just for people watching who haven't been following crypto closely, this is a massive change. You know, for the past year, the SEC has been cracking down on crypto following the collapse of FTX. And now to have someone who's not only like neutral but positive with digital assets, it's such a big change. You know, people were saying, oh, we're going to leave the U.S. This was the attitude. Now to think the world's biggest markets are, you know, have a regulator who's friendly to it means for them, you know, now we can sort of get this support by institutions who were wary, sitting on the sidelines. So it is, you know, they think it will be a big change.
Anna, thank you very much. Thanks for the briefing. Bloomberg's Anna Herrera with more positive news lines around crypto than we've seen in recent years. So interesting to continue to watch that. Joining us now to talk about how the markets are digesting this, our Markets Live executive editor, Mark Cudmore. Mark, let's talk about the markets in 3 minutes. And let's start with the role of crypto, shall we? Bitcoin at 100,000. What relationship does this have to other assets, such as stocks? Because on the one hand, maybe it competes with them, but I know your team's been writing about a virtuous feedback loop between Bitcoin and, for example, the Nasdaq.
Well, I think the first thing to say is that today was interesting because there wasn't an obvious impact in other markets. At the time, we were thinking Bitcoin hits 100K and other markets shrug. There was really not much of a reaction. And generally in the past, we have seen a much stronger positive correlation of when there's enthusiastic risk sentiment out there. We see stocks doing well. It's when crypto also does well. There is a general theory that, look, there's enough people who own crypto. I think I read that Bitcoin had added $1.3 trillion in market cap over the last couple of months alone, which shows that that's wealth that's gone into people's pockets, and they don't spend it all back into crypto. I know that there's a ethos of holding your crypto and just piling more money into it, but they do spend more money, they do pile more money into other assets, and it's good for the stock market, it's good for the economy. It's a wealth effect just like anything else.
Yeah, it certainly had a big effect last time we saw these kinds of numbers in terms of the luxury trade, so that's maybe one read across. Presumably, though, Mark, this is a giant liquidity suck. So where's the money coming from that has generated this move?
I'm not sure if it's that much of a liquidity suck. It sounds like very big numbers, but remember, you've got, $6 trillion in money markets. You've got a lot of liquidity out there. The 4 biggest central banks in the world, still have cumulative balance sheets. I think it's about 30 trillion at the moment. There's a lot of money awash there, and that's not including leverage. And of course, a lot of the money that goes into crypto can be on leverage as well. So it's also important to emphasize that much of these gains can be paper, particularly in the non-Bitcoin cryptos, which have surged a lot since the election as well. You might have very small turnover, which is turning over a few price, which implies that really billions have poured into an asset where there's only been maybe a small amount of money that's bought a token at a high price, and that sets the whole market cap. So I don't think it's been too much of a liquidity suck, but you're right, it's a partial liquidity suck. But every asset's going up. The world's feeling wealthy at the moment. Growth is still going strong. At the moment, we're still on the positive treadmill.
Yeah, new records on US stocks, for example, Mark. Now, if you looked at the bond spreads in Europe today, the French spread over bonds, you wouldn't believe that the government had been voted out after hours last night, would you, perhaps? But I suppose this has had a big build-up. What strikes you as interesting in the way that this is being traded, Mark?
So I think, first of all, Ven Ram on the team has argued a lot in the last couple of days that this is about the peak of French stress in the short term. And I think that the folding the government is not necessarily a bad outcome. Macron can impose austerity, stay the leader. He might be playing a bit of a blinder, the long game, that it undermines the opposition. But I think in longer term, it does not increase enthusiasm for French assets or European assets, and that's not good.
Mark, thank you very much. Bloomberg Markets Live executive editor Mark Cudmore. You can get insights from the whole Markets Live team. MLIV Go is the function to use on your Bloomberg terminal. Let's get to Joe Easton. He's got a briefing for us on individual stock moves. Joe.
Morning, Anna. So Amundi is looking to potentially buy the asset management unit of Allianz over in Germany. This is according to a Bloomberg report last night. Now, Amundi actually needs a bit of a boost. The stock has sold off recently due to some concern around their business in Italy, given the recent headlines around consolidation over there. In terms of Allianz, do bear in mind that this is a pretty small part of their business. About 95% of the company's business volume actually comes in insurance, not asset management. But nonetheless, both of those worth keeping an eye on in the opening trading today. Then in terms of UK retail, a couple out today. Frasers are looking a little bit grim in terms of some of their headlines. They've said they've seen a weakening in sentiment both before and after the UK budget. There's also been a bit of a softening in their international business as well. We have seen a decline in that one recently, mostly due to those worries around the budget and the implications for rates as well. Watch of Switzerland, meanwhile, does look a bit positive. They say only modest increases in the prices of Rolex has boosted their demand recently. That one has come down a bit, given some profit warnings from the UK and US-focused company recently. Then, in terms of energy, breaking news on a joint venture between Shell and Equinor. They say they're going to combine their UK North Sea oil assets in a 50-50 joint venture. Now, Equinor is the one that's underperformed recently, given worries about their dividend and also buybacks as well. Potentially could see some upside in it, that one today. And in terms of ratings, we're going to stay on the energy space first, because we've got an upgrade for Total Energies. This one coming at RBC today. Diageo, the maker of Guinness, gets a buy rating over at Jefferies. And in recruitment, Adecco is an underweight over at JP Morgan. That one, it could be weaker in Switzerland this morning.
Joe, thank you very much. Our equities reporter Joe Easton with a look at some of the stocks on the move. I'm just looking at the GMM screen to see what stands out there, particularly useful on commodities and thinking about where London opens. So iron ore prices a little weaker, guy, down by 1.7%. Talking of London, though, AstraZeneca actually weighed. It had a downgrade yesterday, and that really weighed on the FTSE 100 yesterday, taking lots of points off. Overnight, it's had some slightly better news flow surrounding a drug approval in the United States, so we'll certainly keep an eye on the drug sector as well.
We'll keep an eye on that. It's interesting you talk about what is happening in the drug sector. A nice piece on Terminal today talking about the concentration risk within Switzerland and how that market is being affected maybe by some of the concentration that we've seen in the States. In the States it's worked, maybe in Switzerland it doesn't necessarily. So in terms of the market open this morning, we are looking at a futures picture that is fairly mixed, to be honest. We are looking for the next sense of direction, where the next sense of direction is going to come from. We're obviously building up towards payrolls. That is going to be a story that we are going to manage throughout tomorrow. So a lot of news yesterday. Do we get any news today? We got a lot of news tomorrow. Is today something of a hiatus? Anyway, the opening trade is up next. This is Bloomberg. A few minutes to go until the opening trade. I want to talk about yesterday's session, which I think is fascinating in so many ways. So much going on yesterday, so much happening in the States, so much happening here in Europe, so much happening in Asia, Korea, France, what was happening with the Fed and Bitcoin, all of these things sort of coming together. Stocks rallied a little bit. We continue to post record highs, just inching higher and higher over in the United States. Europe rallied, faded a little bit. I think there's a little bit of margin that maybe needs to be priced in this morning between these two. Let's take a look at futures and see what we're looking at this morning. What is interesting is that you don't get a big standout from CAC futures. Look at that. CAC futures down by 0.2%, 0.3%. FTSE futures down by 0.2%. Stocks 50 down by 0.1%. France doesn't stand out. Feels like France maybe is now in the price. We don't know what comes next. And I think that's going to be the interesting thing that markets next have to deal with. We also, of course, don't know what happens with the US economy and payrolls and what Trump does next. All of that. So much uncertainty. Stocks just continue, though, to inch higher, Anna.
Yeah, absolutely. We certainly saw that stateside, didn't we, yesterday? Guy, let's have a look at some of the individual stock names. Money management, asset management seems to be in focus. Amundi interested in acquiring control of Allianz's asset manager. That's Allianz Global Investors, of course. The French company looking around for deals amid an industry that is consolidating, so we'll watch that. Shell and Equinor, talking of consolidation, they're forming a joint venture to put their UK offshore oil and gas assets all into one new company, so we'll keep an eye on that one. Safran, also in focus. They've outlined targets for 2025. This is all ahead of a capital markets day that's taking place today. Analysts have been describing this as a little soft all round, though, so we'll watch that one, how that one performs. We'll keep an eye on Vodafone as well, Guy, given the approval of that deal with Three.
Yep, plenty of single stock stories that we need to factor into our thinking first thing this morning. Let's talk about the opening trade. Here it is. Let's put some numbers on the screen for you and figure out what we are doing here in Europe at the get-go this Thursday. FTSE's a little soft, but not by much. I suspect you're going to see a similar narrative being replicated across many of the other bourses around the continent. We are looking for 1/10, 2/10 to be lower. The IBEX is up by 1/10 of 1%. The Stock 600 is down by 1/10 of 1%. So we're not exactly going anywhere in a hurry first thing this morning. We'll wait and see what the CAC does today. 7303 was the number yesterday. The DAX keeps pushing on to record highs. A little bit of a drop today. We're down by 1/10 of 1%. Again, nothing really to write home about there. Maybe a marginal level of underperformance coming through from French assets, down by 0.3 of 1%. Stock 600 absolutely flat on the day, but I think that looks very marginal to me. What are we seeing below the surface, Anna?
Yeah, absolutely. So we do see, the CAC a little bit weaker than the others, but not by a huge amount. And actually, that might have not all be about French politics. We see Safran as the biggest loser in the industrial space, and that is, in turn, the biggest losing sector. That stock is down by 5.2%. I mentioned that we'd had some negative response from the likes of Jefferies, talking about the targets looking soft all round, and so that's something that we are monitoring as we head into an investor day there. So a little bit of weakness in that particular business. There is a share buyback, it seems, but seen as a bit of a silver lining by analysts. So that's one of the movers that we're keeping an eye on this morning. In terms of the other stocks and sectors in focus, I saw that travel and leisure was doing okay this morning, but we're not moving all that far, are we, Guy? We're almost entirely flat on the Stock 600. So even if there is a tiny bit of underperformance, and you really have to squint to see it in the French French market, then, overall, we're just waiting.
It feels like we've travelled and now we've arrived.
Arrived in a place of considerable uncertainty.
Yeah, but
on many fronts.
But we don't know which direction we're going to go in. So that is the uncertainty. French assets, a little bit of underperformance. Critty, dig a little bit deeper. What are you seeing? Is there anything we can sort of tease out of what we're seeing in terms of the move we're seeing this morning?
Well, there is a tiny move, to be sure. And, of course, it's not the big march. It's not the big sell-off that I think maybe people might have been bracing for just a little bit. You mentioned it in the futures picture. Perhaps a lot of this baked in the price. But the underperformance is crucial as well. Because, remember, in the last 24 hours, yesterday, the global equity market had rallied. And France did as well, just not by the same margin. I think that is significant. This morning, down by about 0.2 of 1%. You are even seeing a boost in euro-dollar as well. But there are signs beneath the surface. And this is where I want to go to the banking sector. Given that exposure to the French debt and the corporate debt there, you're actually seeing it in corporate bonds of these big French banks. So even though we've already seen the French banking sector, the stock, that sector as a whole, really take a beating, so have their bonds. And that's kind of a double effect because of their exposure to some of the French story and, of course, to the French sovereign debt as well. You can see it on your screen there. In that 1 year's time, that's where the pain is really showing up. So again, I think the takeaway from the market reaction that we've seen in France has been that this will be a slow and steady, but yet very much a pain trade, one that doesn't really yield shocks or systemic risk, but one that will ultimately get to some scary levels down the road. At least that's what I'm hearing here in Paris.
Critty, thank you. Critty Gupta in Paris, keeping an eye on all of those French assets. Let's broaden the conversation. Joining us now, Stephen Orth, CIO for Equities at Federated Hermes. Very nice to speak to you, Stephen. Thank you for being here with us on set this morning. Just in the break ahead of this conversation, we were throwing around the idea, a guy was asking about whether politics does seem to be in the driving seat. I mean, maybe today we take a little bit of a break or at least pause for reflection on the politics, but it does seem as if politics from the US to South Korea to Paris, it's playing a big role at this point.
Yeah, and unexpectedly, it seems like 6 months ago, people would have predicted that the U.S. politics would have been a negative for the U.S., and it's actually coming out in reverse. It looks like we've got a pretty powerful growth agenda that's put in place in the U.S. Trump won a big election with a pretty broad mandate, so he's probably going to get that agenda implemented fairly quickly this time around. He's kind of been through this drill before. So the markets are looking at a kind of growth agenda in the U.S., and now we're seeing unexpected difficulties overseas. And it's kind of the inverse of what you might have thought.
And you continue, even though we're at records in U.S. stocks, you continue to allocate to U.S. stocks, do you? And if so, is it the big caps that have benefited already, or is it a broader range of stocks?
We're in the broadening out trade. We're kind of, I look up and down this, we like the whole market, so we're overweight U.S. stocks, but we really are overweight value stocks and small cap stocks, because that's where we think the big advantages of the Trump agenda come up. Deregulation really helps the smaller cap companies. Lower taxes really helps the smaller cap companies. Government efficiency drives kind of help them. And that's where the valuation gap is. So we see that as being, where the trade is heading. Sort of the market is coming our way. I mean, the small caps have massively outperformed since the election.
Do you think in aggregate, US equities are in a bubble?
Not yet, Guy. You were asking me during the break, what do I worry about? There's two things. One is a bubble in the U.S. market. We're not there yet. The broader market, and actually the way we get to our 7,500 target on the S&P is we've begun to think of it as two markets with two different multiples. So you've got these Magnificent Seven stocks that are very unusual. They're highly priced, asset light, cash flow generators that are growing at 15, 20% a year with moats around them that are very unique worldwide. So money's flowing into those stocks, and I think they probably are worth around 24, 25 times their earnings given those solid fundamentals. So if you pull them out, the overall market is trading at around 19 times, maybe 20. We think it could trade at an interest rate, we're assuming 4% 10-year yields. We're kind of seem to be stabilizing near now. We're thinking that's kind of where things are even 3 years from now. So if you look at environments where you've had that kind of a yield, 18, 19 multiple on stocks broadly is a reasonable one. You put those two together, and the multiple on the S&P could be around 21, 21.5 times. The Magnificent Seven is 35% of the S&P. So when you add all that up, and then you put the growth agenda in place and assume it comes through in a reasonable way, you can get to 750 in earnings, 350 in earnings on the S&P, we think pretty handily by 2027. Which
you don't see a recession before. There's no chance that, because that feels like one of the kind of it's got to be the biggest risk out there. Certainly that you can kind of the known unknowns category.
So, yeah, and it has to be something we haven't thought through, right? Some sort of unexpected asteroid hitting the Earth or something. If you look at the underlying
like
fundamentals,
the S&P would go up in that scenario.
Yeah, companies are very profitable. They've got a lot of cash. You got costs going down, earnings going up. The economy is pretty stable. You don't see a recession on the horizon. And I think we have like these two puts, which I kind of like about the market. We've always had the Fed put. If there is some sort of a crisis, well, that'll be a buying opportunity because the Fed will step in and provide liquidity. It's got lots of room. On the other side, what we're seeing, particularly out of Europe here, is I call it sort of the Liz Truss put on policy. It's like when policy dynamics, because we could worry about all these political developments in France and Korea, even in the U.S., but we've already seen when policy dynamics get a little bit crazy, boom, the bond market vigilantes come in. And that could happen at any time in the U.S., if they go crazy with deficits, as an example. You have the bond yield pop above 5. The markets would get in line in a hurry. The policy would come back something to a more moderate. So on a long-term call, I think it kind of gives you a pretty bullish setup for stocks. You just have to have a little cash on the side to buy those kinds of dips.
So you put your faith in the bond vigilantes to keep the White House's ambitions in check a little bit.
I think, it'll help to make sure we don't do anything too crazy. Or out here in France as well. Yeah. Right?
In terms of the international space then, so that's US stocks. You still, find a lot to like there, clearly. In terms of international allocation, you don't allocate to Europe. You allocate to emerging markets, it seems.
Yeah, we're overweight emerging. We cut back, very beginning of July, we cut back our EFA, which is Europe-Japan exposure, pretty substantially. And we just think, one, the whole Trump agenda doesn't look all that positive for Europe. He's going to want more defense spending, and he's going to want some sort of tariff trade relief. Both those things are growth negative for Europe.
So that you can't grow with the defense sector. I mean, it's just too much government spending. It stops them fiscally spending on other things.
And they don't have the big growth tech sector, right? If AI is the big driver of this next leg of the bull, which I think it has to be, Europe kind of doesn't have that. You can make the case that China is the closest second in the world to that, and there is a much bigger tech allocation, if you will, or good tech stocks inside of the emerging market indices. So we're overweight there on the idea that that's where, valuations are very attractive. And we're sort of playing chess a little bit here, thinking that the next move Xi has got to make is he's got to really go after stimulating the domestic economy. It's the only way to get Trump off his back. And he's got the wherewithal to do it. I mean, France doesn't really. Creedy just ran through the numbers there. They're not very good. their 7% deficit, et cetera. So China is the one that has the levers and has the incentive. They just haven't made the move yet. And the markets are trading off because of that. But we think that's where valuation is. So we're overweight there.
How do I, if I'm trying to think about a portfolio, I've got the US markets, you think the opportunity there is if we get a dip, we buy it. Europe looks very cheap, the rest of the world looks very cheap. How do I build a portfolio that reduces volatility, that looks like it's coming? How do I build some volatility protection into my portfolio?
We've got an overweight in cash and an underweight in bonds.
Right.
So usually bonds are the source of stability. But we're thinking, because of sort of the Liz Truss put, if you will, we're thinking the bonds are the potential source of instability. So we're underweight bonds and we're overweight money markets, which actually, in the meantime, my old friend Tom Keene back in New York, I mean, you know, it's his triple short money market fund is actually yielding a pretty decent yield. So we think that's the way to position. And then within the equity market, to be a little more tilted towards the value stocks, the small cap stocks, which have better valuation and maybe better support in a downdraft.
Catch me up, Stephen, on your thoughts on the crypto universe, given we're at 100,000 and a lot of people talking about the SEC will have a very different approach to crypto this time around under a Trump presidency than the prior administration. Institutional investors busy rethinking what they thought they knew about crypto, or not right now?
You know, Anna, my hats are off to the guys making money in crypto. It's just not what we do. Like I tell my guys, let's focus on what we do well. We can analyze businesses, understand what their moats are, what their future earnings are, discount those back, and figure out what they're worth. Crypto is sort of like gold. You're kind of guessing what the next guy is going to pay for it. And some people are very good at that. That's just not what we're that good at. So I don't have a real view on crypto. Yeah. I just view it as one that we don't have a view on, so we'd rather not play that game.
Stephen echoing Powell there, saying it's like gold. Digital gold is his view yesterday, he expressed.
Yeah, maybe we get a Fort Knox equivalent in the United States. We'll wait and see what that would ultimately look like. Stephen, great to see you on this side of the pond. Stephen North, CIO for Equities at Federated Hermes. Let's take a quick look at what the Core 6 looks like this morning around Europe and what we're watching in terms of the individual moves. Bit of a move into tech. Luxury seems like it's having a fairly good morning. ASML is up. Ferrari, LVMH also both tracking higher. Novo's a little bit softer. There was some data floating. I saw a story floating around about compare and contrast with the Lilly products. That stock is under a little bit of pressure this morning. Let's get some more individual moves. Joe's got the details.
We're seeing a big drop in Frasers Group in the opening of trading in London today. As we said earlier, the company has downgraded some of their profit forecasts, citing a weakening in sentiment since the UK budget and after as well. It's down 15% almost at the moment. That is the biggest drop since the outbreak of the pandemic in 2020, according to our data. Already down sharply this year and dropping out of the FTSE 100 as well for Frasers. Watches of Switzerland getting that boost. They were flagging better than expected demand as the prices on their Rolex watches have been more modest than normal, according to them, helping their volumes. That stock getting a decent gain, up 7% now for Watches of Switzerland. Then Safran, that was discussed earlier. They have got a buyback in terms of their capital markets day, but also a bit of a downgrade in terms of some of their profit guidance for the maker of engines. It's focused on the narrow body, short haul plane engines, a competitor to Rolls-Royce, but kind of in the short haul market and underperforming the rival Rolls this year, down another 5% today, coming off some recent gains for that one. Then in terms of the Bitcoin exposure, you were discussing Bitcoin a moment ago, and these are the companies exposed to Bitcoin in Europe, the main ones to look at. These two down the bottom are the biggest ones, with a few billion in market cap between them, gaining around 5% and 8%. Those both listed in Stockholm. CoinShares gaining around 6%. That is the biggest of the three. Northern Data, a smaller one, getting a boost in Germany as well. In terms of the ratings, the two that really caught my eye, one of them was Total Energies, and that's because it has had some downgrades recently, but RBC reckons the capital outlook in terms of shareholder distributions is better than expected. They go outperform on that one. And then Diageo, a bit of rare positivity in drinks. This is as Jefferies says that the growth for spirits is going to be better than expected under their new heavyweight CFO that they appointed recently. So they like that one. And Diageo gaining 0.8% in London this morning.
Thanks, Joe. Joe Easton from our equities team. So Joe talked about Watches of Switzerland, just reiterating the move there. We see that stock higher this morning. Then they are keeping their guidance unchanged, but the numbers seem to have gone down well with investors. Coming up on the programme, Europe's biggest asset manager, Amundi, is said to be interested in acquiring control of rival Allianz Global Investors. We'll talk about consolidation in the asset management industry. That's next. This is Bloomberg.
Let's call it 20 minutes into the equity markets. This equity market session, this is what we are looking at. Broadly up, but not by much, I think is probably the narrative that we're looking at today. Banks, travel and leisure, autos, the lead sectors in terms of where we're seeing the percentage being added. The banks are up by 1% this morning. There's a number of individual stock stories that we are keeping a firm eye on this morning. There's a few ex-dividends out of the London market that are probably worth focusing on as well. And a few investor days causing shenanigans as well.
Yeah. So maybe on the ex-divs, maybe keep an eye on the real estate sector. I think some of the London names in that sector going ex-dividend. Industrial goods and services is one of the weaker sectors, and Safran is in there. That stock down by 4.9%. So that investor day not going down all that well with investors even before it started.
I was about to say. Let's talk about what we're seeing in terms of the M&A story as well. We have firmly focused of late on what is happening in the banking sector, and the ideas of consolidation that continue to be floated there are of interest. But maybe the story that's actually gaining some traction is what is happening in the wealth management space and the asset management space. Amundi, the latest story that we're focusing on, it is said to be interested in acquiring the control of Allianz's assets. In the form of Allianz Global Investors. The insurance company owns Allianz Global Investors. The French company definitely looking for deals. This is Amundi. We are seeing consolidation within the space. Leo-Ken Sherpa joining us now around the table this morning to be talking about this. What do we know about how far talks have progressed?
Yes, so there have been on and off talks between the parties for the past couple of months. And now we might see a deal before Allianz's annual result in February, but it's still far off. There's two options on the table, either a full acquisition by Amundi of AGI, Allianz Global Investors, or a majority stake. And I think at the moment this seems more feasible because insurers generally like their asset management arms, their in-house asset management arms. It allows them to, basically it means lower fees for them. It also means they can invest their premiums more efficiently. So I think Allianz has reason to cling on to a stake of AGI. And then
so why would it sell it? If it's such a nice asset, why thinking about unloading it?
So I'm quoting here. This is not my personal opinion, but it's basically considered subscale. They need scale,
right?
Basically, they need to grow. And this is the issue for various, actually all over Europe, all traditional active asset managers, they need to seek scale. One executive in the industry told me the other day, it's basically 10 years ago we thought 1 trillion in AUM, assets under management, would be the goal, would be good. And now it's more like 3 trillion is what they need. And Amundi doesn't even manage 3 trillion, so we're... this is driving the whole M&A situation.
OK, yes, I was going to say, so why now? Why is this happening now? I mean, scale is part of the answer then, Leo, if even some of the biggest in the business aren't big enough.
Yes, no, exactly. There's another driver, which is a bit of a quirk. There is, it's called the Danish Compromise, which has been driving the biggest deal so far this year. BNP buying the AXA investment management business. And the Danish Compromise basically dates back to the 2012 EU presidency of Denmark, which basically allows banks to take on insurers with a minimum hit to capital. And this is a big driver actually behind this M&A situation in Europe between asset managers, banks, insurers. It's really been a trigger.
But consolidation is required to gain scale. So therefore, where else are we looking? It feels that there are other deals potentially in the offing.
Yes, that's exactly right. So you had Generali, the news broke just last month, Generali looking at Natixis investment management. So that's the asset management arm owned by BPCE, French banking group. And you also had Banco BPM launching a bid for an asset manager called Anima. And that bid, to make matters more complicated, that bid got disrupted when UniCredit launched a bid for Banco BPM. So it's an exciting time for the industry.
Leo, thanks very much. Bloomberg's Leo Kensherpa with that consolidation story. It is a big day, it's a big week in French politics. How is that playing out for French assets? Let's get back to Chrissy in Paris. And Chrissy, we do see some underperformance from French stocks, but there are some individual stock drivers, I'm thinking of Safran, for example, that are partly outperformance by French stocks despite what we're seeing in Safran. Talk us through the French asset performance this morning.
Yeah, Anna, a complete turnaround when you look at this equity picture. You are seeing the CAC higher by 0.5%. A lot of that driven actually by the banks picture. And I think this is interesting because you mentioned Safran as kind of one of the underperformers. Your biggest index contributors to that gain is Total Energies, which of course we know has been dealing a lot with the government, is talking about listings, is also one of the front runners in terms of corporate taxations. They may get hit at one of the hardest if you see France actually get boosted on that front as well. And then it's BNP as your second biggest contributor, seeing quite a bit of volume. It's interesting that it is now the outperformer given the political overhang that you're seeing. But let me argue kind of the bull case that I've heard from French investors as well. This idea that even though political uncertainty can be a negative, can be an overhang for French assets, it can also be a little bit of an increase if we do get, or a little bit of a tailwind, I should say, if we do get a switch to this technocratic government, simply because the likes of Bloomberg Economics, for example, has talked about the switch to a 2024 budget getting rolled over to 2025, including more austerity measures that actually brings the deficit, could potentially bring the deficit lower below 5% to potentially 4.8%. That's the analysis out of Bloomberg Economics. So the worries around the deficit, those actually could, in a very weird way, be sorted. If we're looking for a reason to be bullish, that may be one.
In terms of what people are seeing in the long term, Kriti, what are people talking about there? Considering that the politics isn't resolved, that we have a long way to go potentially to resolving the politics, is there an expectation that we are going to see a long-term discount being applied to French assets?
There may be, but what's interesting here and what I've learned here is that it may not actually be just a French story, despite the political overhang that we talked about. A lot of people actually are keeping their eye on their neighbor. Remember, France's biggest trading partner is Germany. So after they're looking kind of through what Emmanuel Macron does in the next couple of weeks, they have their eyes on the on the German election in February, where the layoffs of ThyssenKrupp, VW, Bayer, etc., are kind of spooking a lot of French companies, saying, is that something that's going to bleed across? And I think in the long term, France actually may be looking to Germany for that tone shift.
Kriti, great stuff as ever. Thanks very much indeed. Kriti will be back a little bit later. We'll continue to update you what is coming out of the French capital. We're going to turn our attention next, though, to what is coming out of the United States. Is the US stock market in a bubble? We're going to discuss that next. Victor Haghani, founder of Elm Wealth, Peter Cheer of Academy Securities, both on this side of the Atlantic, both here to discuss what comes next. This is Bloomberg.
There's a set of institutional relationships between the Fed and every administration. I fully expect that we'll have the same general kinds of relationships that we have, institutional relationships, for example, with the Council of Economic Advisors, but most importantly with the Treasury Department.
The Fed Chair Jerome Powell speaking in New York yesterday. So there you go, Guy. The institutional relationships will still be there. He certainly still anticipates being there. We heard that from the press conference after the last rate decision, didn't we? The way that there is the expectation that they at the Fed get to serve their full term. And we will be able to deliver what is required for the US economy as that process unfolds. Unfettered seems to be the kind of narrative. The US economy, though, looks like it's in great shape right now. Kind of feels, certainly sitting here in Europe, that America is an exceptional place. Is it, though? US stocks, bonds, maybe I roll Bitcoin into this story as well. Maybe the whole US economy, in fact, could be in a bubble. And even if this is true, is America still only the only place really worth investing? Because, well, bubbles can inflate much further, and that gap between the United States and the rest of the world can only widen out potentially from here. Is that where we are? And if it is, where are we going?
Let's try and figure that one out. We've got a great panel around the desk with us this morning. Victor Haghani, founder of Elm Wealth, and Peter Tchir, head of macro strategy at Academy Securities, both joining us around the table this morning. Peter, let me start with you. Bubble, no bubble?
You know, I would say to me, Bitcoin and crypto is actually clearly in a bubble. It can go further. At least that one's very easy to see why we're there, right? Trump has seemed to embrace it. Many people in his administration embrace it. And I think a lot of people actually still believe the fact that the government, U.S. government, might start buying crypto. Yeah. I think that's going to disappoint people. I think, yes, the SEC is going to be kinder. I think this has a way to run. I would not stop it. But I do expect at some point Trump to not embrace Bitcoin the way people expect. So that could fall off, but I would not touch that. Away from that, I think, the market's trying to figure out what is going to happen in the U.S. There's, I think, two things that have been driving some of the returns. Yep. One, the belief that Musk and this, Department of Government Efficiency can actually do some things to fix up the budget. And then certainly fighting against not in my backyard. I think we are going to see a real push in the U.S. to develop industry, whether it's semiconductors, rare earths, critical minerals. And one of the big hindrances in our country has been not in my backyard. We have not built a brand new refinery since the 70s. And I think there's a belief that Trump will cut through that red tape, reevaluate, and that's providing a lot of the growth story. And that I do believe in, actually.
OK, so you believe in a bit of it. U.S. stocks? Let me just try and pin you down on that. U.S. stocks in a bubble, yes, no?
Some segments, I think, the valuations are very stretched. Again, I do not fight things in December, though. December tends to be a very good, trend-following month, so don't stand in the way. But look for what's going to be out there. I'm really starting to pick up a lot of interest in CRE, commercial real estate. I think rates are going to be stable. I think companies are working their way through a lot of this. And I think we are going to see a huge push next year to work from office again, right? The federal government still 100% work from home. Yep. Musk is going to change that. That's going to start filling out office space. Okay. Companies are going to follow.
I'm still not sure I've got an answer there. maybe I'm going to get one from Victor. What do you think?
So, I think that the bubble question is, is important. But what we really need to know is what's the expected return of U.S. equities. And there's consensus on that out there, and it's really low. So whether we're in a bubble or not in a bubble, the outlook for investing in U.S. equities for the long term is just not very rosy. I mean, I'm not saying that, the consensus is that long-term U.S. equity returns, will be just 1 to 2% higher than what you could get in owning government bonds. So is that a bubble? It's hard to tell, but I think that the expected returns are low, and there's a consensus around that as well. It's not just looking at earnings yield, which is low, but people that look a lot of different things think the returns will be low.
So do you not see a sort of exceptional growth story in the U.S. under the next administration, Victor, and you don't see that turning into better returns for stocks?
It's remarkable. We think of the U.S. as this earnings engine, right? And it's been this remarkable century going back 100 years for U.S. growth, productivity, technology, all these incredible things. But earnings of U.S. corporations over the last 100 or 125 years have not decoupled from underlying growth of the economy. So there hasn't been any, any period, any long period where earnings just gets totally away from economic growth. So I don't think, I think that the safe bet is that earnings growth over the next 10 years, 20 years, whatever, is going to be in line with, that earnings adjusted for buybacks, adjusted for retained earnings, and adjusted for inflation is not going to be terribly exceptional. I think that's the safe bet.
OK, I feel gloomier now. I was expecting this to be more bullish about the U.S. economy. You're a little more bullish than Peter about the U.S. economy. Do you see the earnings story any differently to Victor?
Again, I think a lot of the left-behind industries are what you want to look at. I think there is going to be a real push for infrastructure, commodities. So I think commodities themselves will remain low in price, right, because we're going to produce more. But I think the companies that produce those commodities can do very well. I think the companies that supply the products to help those companies extract energy and rare earths from critical minerals from the ground will do very well, so I'm excited there. I do think that we have to live in this world. I think right now you want to buy some puts. To me, Trump likes chaos, right? That's how he lived. Yeah. And a month ago, when I said that he was mostly doing these as bargaining tools, it was anti-consensus. Now it's become full consensus. So I'm sitting there, my view right now is Trump's probably sitting there, no one's bothered by me right now. What can I say to bother people? What can I push the narrative hard on people? So I think the next shock in the U.S. is going to be something that does scare us again, where he says something maybe a bit outlandish, and that rocks the markets a little bit.
Peter, if you knew what Trump was going to do, if I told you tomorrow this is what Trump is going to do. This is what's going to happen. These are going to be his policy kind of priorities. Do you think it would be possible to predict the market reaction to those? How much chaos are we going to see? And is it possible to get a handle on what is happening?
So I think it's very difficult. I'm, having a trading background myself, so, currently a strategist, but I always look at positioning. How is the market positioned? What's consensus? So it's always that fight against consensus. 2 weeks ago it was easy. 10 years were 445, 450. Everyone said Trump's going to be bad for the deficit. Yep. They were overstating immigration issues, inflation issues relative to tariffs, and everyone was so short-sighted it got easy to get to 415. Here I think that's a little trickier. I think equities are starting to get that point. I do think September can push us further along, but you are going to want to be buying protection on equities because people are getting too bullish. And even if the story turns out great, a lot of that's priced in. And the risk is that he does something or says something. And, I think there's a chance that him and Musk have some sort of breakup, well before the end of 4 years.
That sounds like it's hard to call then, Guy.
So, so this is taking me in the direction of Victor's game and his crystal ball game, which is basically you get given the information beforehand and then you've got to try and make bets off the back of that, make investments on the back of that. We're going into a world where the world is so unpredictable. How easy is it to navigate this from a market point of view? At the moment, it feels like everything's on rails, and those rails largely point from a risk asset point of view up. Given the uncertainty that we have going forward from here, are tomorrow's headlines useful? Is the predictability of the world that we live in at the moment going up or down? What do you see in the crystal ball right now? And is the crystal ball useful in determining what markets are going to do over the next year? Can I make a prediction right now? Because I'm going to read a lot of research notes over the next few weeks telling me about what next year is going to look like.
Yeah. Well, so the first thing is that, I think it's really hard to generate really good returns just using public market information to time the markets. So whatever, whatever everybody knows doesn't seem terribly useful for predicting the markets. But, what if we had private information? What if we had a crystal ball? The question you're asking, like if we knew what Trump was going to do, how helpful would that be in predicting the markets? And I agree with Peter that it's not that helpful at all. That there's just so much randomness that has so much to do with positioning and kind of chaotic events and so on that I just think that it's, even if you had the newspaper 2 days ahead, as long as, if you had a newspaper that said stocks went up, bonds went down, you could make a lot of money. But if you have a newspaper that's just telling you the news, just telling you what's happened without telling you about stocks and bonds, our research, this game you're referring to, the crystal ball game that we built, and 10,000 people have played it on our website, where they can try to test their skills by getting this newspaper ahead of time, trading on earlier prices, and they don't do very well. I didn't do very well myself. I built the game. I didn't do very well until I played it about 10 times debugging it, and then I started to do better.
This tells us something interesting about what that private information would teach us. But it's only knowing what Trump's going to do is only part of the story. And this comes to your world, Peter, because there's the reaction function from the rest of the world, which then maybe is that less predictable?
Yeah, I think, one, we don't know what's going on around the rest of the world. Certainly there's geopolitical hotspots everywhere. We're not sure what's going to happen with Russia and Ukraine. I think one thing that happened that we're looking at is the Russian invasion of Ukraine really pulled NATO together, pulled the U.S. closer to Europe. And now I think we're starting to see some threat on the economic side where Europe and the U.S. is definitely going to butt heads with China. I'm not sure Europe's in position to do that. One thing, we're not in a debt crisis or anything here, but in every time of stress over the last 8 years, Germany's been in a juggernaut, right? Germany's been the staple of the European economy. They're no longer in great shape. So I think there's some risk of a little bit of fracturing. When I look at the world, I see China kind of working with these autocratic, resource-rich nations, trying to sell their products globally, the U.S. kind of butting heads with China, and Europe kind of caught in between. And I do think the one thing I would say is, if we know where things we're going to do, I think in 3 years, shipping is going to be much more of a question. There's a bunch of things you can put on, and corporations are looking at that. So they're strategizing for 3 to 5 years. I think one of the unfortunate things is a lot in our business, right? You've got to make this quarter, this year. And even if you know exactly what things are going to look like in 3 to 5 years, the path to getting there is noisy and messy. So I think you want to keep some core holdings along these things that you have a high conviction in, that commercial real estate is going to do better, that we're going to build more in the U.S., that we're going to extract more energy from the ground, process that in the U.S. Those will be great trades. You want to have that as a core of your portfolio. And the rest, then you have to kind of balance your positions to outperform the market. And that's where you're trying to judge what's been overbought, what's been oversold, and look for is the market more susceptible to negative noise or positive, right? At some point, Bitcoin right now, what's going to come out positive that drives it to 120? I don't know, but it becomes very easy to see things that drive it back to 75 or 60.
You guys spend a lot of time with people that have done things like running navies and running armies and running governments, and they give you long-term insight. Is this a market where you just have to look through the noise?
I think to a lot.
Or is it a market that you need to trade the headlines?
I think, again, I like a core positions of looking through the noise, and then you're trying to balance that. There's going to be trading opportunities. Things get too high. Even stocks that you love all of a sudden are 20, 30% higher than you ever thought. Take some profits, look at that. And I think the one thing we're also going to have to get much better at with Trump 2.0 or whatever you want to call it, is really looking through to the details. One thing that we've been talking about a lot is we're getting asked in Europe, and go back, Trump had said he was going to pull troops out of Germany. That got all sorts of headlines. What did not ever get the attention was his actual plan was to pull the troops out of Germany and move them to the Baltics. And it was twofold. One, the Baltics were more important for having U.S. troops to defend against Russia. And secondly, he was very frustrated that Germany was not paying into its military in the right way. The Baltics were, and having U.S. military bases on site is a huge wealth opportunity for those countries, right? The military itself spends money. The people on the military spend money. And so he wanted to reward the country. So I think as you see things, one thing we all have to learn is every time you see a headline coming out of Trump, dig a little bit deeper, think what's really behind this, and I think that will help you save some money so you don't overreact.
Let me link two things then. So is the expectation of a pullback on NATO from the United States then, is that overdone? And tie that to some of the geopolitical tension that we're seeing, because it's easy, we've seen colleagues doing a good job of writing stories that pull together a lot of disparate threads geopolitically. We're seeing chaos in Georgia. South Korea just this week blew out of nowhere. To a lesser degree, Paris. Plenty of hotspots of violence in Ukraine, the Middle East, and it's easy to think, is this some sort of precursor to a Trump administration? Is that to overstate it?
Yeah, I think that's actually very overstated. So I think what our view would be that Trump is, very erratic. He says things, but I think that keeps people on their heels. I think people felt very comfortable what they could do. One of the big mistakes I think the Biden administration made was they said specifically they would not put boots on the ground in Ukraine. So if you're Putin, you're trying to do the mental calculation of should you invade, it was probably a very low probability, but it's a minus 100% for Russia if we put boots on the ground. We took that off the table. That allowed him. So I think you're going to see a lot more noise. You're going to see a lot less clarity, and that's going to be good. And we hate it. And, I think on tariffs, people are like, oh, these tariffs, it's not going to really do them. They expect someone to come, or, hey, don't worry, this tariffs is just a bluff. That's not going to work, right? If you're going to even bluff, you can't tell people you're bluffing. So get used to a lot more things. But I think it's actually going to keep the enemies much more on their heel because they don't know how he's going to react. He was very careful. And one of our general, people were very involved when he took out Soleimani. And there were opportunities to take out Soleimani before the actual event. But they all involved high risk of civilian casualties, and he did not want to do that. So I think the term peace through strength, or the strength through peace, those two are going to become much more of how he views. And I think the term measured response, which the U.S. really had, I think that starts dissipating. I think we want to put fear back in our enemies, and that will change the dynamic.
Well, you're going to have enemies. Make them fearful enemies.
Yes.
Victor, I've got the book. Guide to Better Financial Decisions. Victor Haghani, James White, forward by Manny Roman. Very nice.
Thank you.
What's the one takeaway?
The one takeaway is spend a good amount of time thinking about how big to size your bets, your risk taking. That getting risk wrong is, that we have to decide on what we want to invest in, but also how much to invest in those things. The how much question is just as important as the what question. So, the book is all about
you can get the decision right, but if you get the amount wrong,
you're bust.
The trade doesn't work. Guys, thank you very much indeed. Lovely to see you both. Victor Haghani, founder of Elm Wealth, and Peter Cheer, head of macro strategy at Academy Securities. Thank you very much indeed. OK, what are we going to do next? We'll talk more about what is happening with the central bank story. Christine Lagarde going into a quiet period, telling European lawmakers yesterday the fight against inflation is approaching its end. But that battle has yet to be won. We'll discuss those comments next. This is Bloomberg.
We will review our stance again next week. following our data-dependent and meeting-by-meeting approach. As a result, we are not pre-committing to a particular rate path.
That was the ECB President Christine Lagarde speaking in Brussels yesterday. Lagarde appeared before European lawmakers on the eve of the week-long quiet period ahead of the ECB's next rate decision, 1 week from today, in fact. For more, we're joined by Zoe Schneeweiss, who leads our economics coverage in Europe from Frankfurt. Zoe, after listening to Lagarde, what are we now expecting then from the ECB next week? It sounded to me, I mean, maybe not her words, but the words of some of the other ECB speakers that we heard over the last couple of days, as if, 25 wouldn't be a surprise, maybe 50 is a stretch.
Exactly. Lagarde was quite tight-lipped yesterday. However, her colleagues have spoken more, and that 25 basis point cut, which would be the fourth such cut in this easing cycle, looks like a done deal. There are every now and then whispers of a bigger cut, but markets just see a 10% chance of that. And quite honestly, there have not really been any policymakers who've done a big push for 50. And that's one of the things we would have need to see if that thing would be an actual threat. But so 25 basis points, economists see it, markets see it, and so do policymakers.
Got a meeting next week. We'll get new economic forecasts next week. What are those forecasts going to tell us? How grim will they be?
That's right. The ECB once a quarter publishes new economic forecasts, both for inflation and for growth. On growth, they already don't have a very strong outlook for the euro area. And the question is, all this turmoil we're seeing throughout the region, how much worse has that gotten since September? Lagarde yesterday already was quite negative about the economy. Obviously, the ECB does not have a mandate that focuses on the economy. Its mandate focuses on inflation. And the thing that we'll be interested in there is how quickly will inflation sustainably be at 2%. We, of course, know that we've had one or two inflation readings below 2% already, but those in a way don't count because then we edge back up above 2%. So the ECB wants inflation to be sustainably around 2%. The latest forecast said that it only would be there at the end of the year, and now the question is, will it be there already in the first or second quarter, as some policymakers have suggested?
Zoe, so they don't have a growth mandate. They also don't have a crystal ball, and they can't tell us any more than the Fed can, perhaps, what Trump is going to do with tariffs, or where at least those tariff conversations will land. So we have to wonder, I suppose, how much the tariff story is going to impact the outlook at the ECB, and how on earth they can reflect that at this point.
Exactly. Lagarde earlier this year was very vocal about the warning of what Trump presidency and what tariffs could do for the euro area economy. The question here a lot of the time is what kind of retaliation will there be? The main focus of Trump has been China. The question is, how quickly does he do something on Europe? Also regarding China, will there be, if China does some kind of retaliation, will there be, and then does not send as many products to the US, will Europe be flooded with cheap Chinese products? How will that play into inflation? The ECB has been, and especially ECB chief economist Philip Lane, have been quite circumspect here. They said really a lot depends what indeed happens. There could be both things that drive inflation and things that mute inflation. So really they've been careful not to give too clear an idea what they do, because they said it so much depends on what actually is enacted in the end.
Bet you Christine Lagarde's happy she didn't take the job as French Prime Minister, or maybe that potentially could still be dangled. Zoe, thank you very much indeed. Zoe Schneeweiss joining us out of Frankfurt. Talking of France, Kriti Gupta's there. What's the latest? Kriti, what are we looking at for the rest of the day? What comes next?
Well, I guess the next thing that comes is Emmanuel Macron's statement at 8 p.m. local time here in Paris. He's going to be addressing, of course, the nation, potentially talking about what his next steps are going to be. Is there going to be a caretaker prime minister? And is that person going to be Michel Barnier? Of course, we know that Michel Barnier had also, earlier in the day yesterday, before the vote had taken place, kind of insinuated that he necessarily wouldn't take the role if offered again, on the idea here simply being that it would confuse the French public if he were gone, voted out, but then still kind of stayed in power. He was hesitant around the idea. A lot of folks talking about his comments in Parliament yesterday as a bit of a farewell speech, despite some of the support from the likes of Gabriel Attal, for example, the former prime minister, who, by the way, I should mention, Zoe Schneeweiss was there talking about tariffs, also used Trump tariffs as kind of a rallying cry for France to get their act together and to get this budget across the finish line.
Yeah, really interesting to see markets being quite sanguine about what's going on in Paris right now then, Kriti. In the aftermath of voting out the government, stocks higher, up by 0.6%, outperforming certainly London. And the French bond spread over Germany, I mean, we're down to 80. This might even be a low for the week. It seems that the market taking it in its stride.
Yeah, it's interesting because this was supposed to be a fairly bearish kind of outcome here, and that the French government can't pass a budget. That's a concern. But it feels like you can almost spin it in a bullish way as well, as that if the issue was uncertainty in terms of the political landscape there, then perhaps we actually see this idea of, do we kind of know what the next 6 to 9 months actually looks like in France? And that may be a positive signal. Or I'll also add, maybe the fact that this technocratic government, the special budget, means actually closing the deficit a little bit. That could be a positive, too.
Corey, just very quickly, names in the frame potentially for the next Prime Minister?
Well, the big one floating around right now is Bernard Cazeneuve, and that's Cazeneuve. I'm going to make sure I say that right. He was a former French Prime Minister. He was certainly in the running around Michel Barnier as well. He is looking like the front runner. A couple others, Jean Castex, also a former Prime Minister, and then of course the Defense Minister of France as well, also in the running.
Thank you very much, Kriti in Paris, giving us the latest on, and we'll continue to watch that, of course, watch those developments coming to us from France. It is going to be about France still, I suppose, waiting to hear from Emmanuel Macron, certainly his plans in the very near term. What does he intend when it comes to finding a prime minister, the type of prime minister, and how on earth will another prime minister, faced with the same parliament, do better at getting a budget through?
Do we need a new president maybe to resolve the situation? That debate certainly seems to be increasingly live in France. I've got my asterisk names, by the way, nailed down by the end of the show. So Michel Barnier, anti-climax, Emmanuel Macron, mea culpa, and Le Pen, disruptix.
This is a very niche joke that has been running through the programme. Guy can explain it to you on message later, I'm sure. On a programming note, we should tell you on December the 10th, that is Tuesday of next week, the opening trade will be live from Bloomberg's inaugural Women, Money and Power event. That's convening influential female voices in finance. We'll be speaking to a host of voices from the world of finance. This is Bloomberg.